All right, let's do this. Friday night, and first of all, for those of you who have emailed asking if I'm okay, I'm okay. Boy, I take 2 days off from blogging, and the whole trading world thinks I've died. I appreciate the interest, and I appreciate the concern. It has just been a very busy week. My priority, of course, is with the trader training effort, week 1 of 4. So that's what's going on here. I will continue to try to use this outlet as an opportunity to provide you with some insight in terms of what's going on there. And so we'll do that, talk a little bit about today's market. First of all, though, I wanted to follow up to Wednesday's post and certainly thank the outpouring of emails that I got in terms of Bob's situation. And all I will really say is I scratched the tiny surface of that whole issue. As you can imagine, anybody who has gone through something like that is going to be faced with challenges that nobody else really can ever relate to, or few people can relate to. And you can only imagine, on top of what I described in the post, the challenges of guilt for having survived, the challenges of mental recovery and tremendous physical recovery and recuperation and therapy, and it has just been such an inspirational story. And I am honored to work alongside this individual. He has taught me quite a bit in the last several months, and I just wanted to follow up a little bit on that. I tried to stay away certainly from the trading analogies. And give it its due justice on its own. The only trading element, I guess, that may come to mind certainly is if you're ever concerned about some kind of silly trade, being in a trade, losing money, which we all do as a part of this business every day. It's an expense, business loss. Then you've just got to look at something like this, and hopefully that'll help you put things in perspective. But anyway, thank you again. I just wanted to touch on that briefly. Tremendous story. Other thoughts. Today, MATD, if you've been following me for over the last decade, morning after trend day. I was up at 4:30 this morning trading oscillations overnight, trading oscillations in the morning. The market provided us with some just outstanding background to get prices to the wholesale levels. We had the GDP at 8:30. We had Chicago PMI both at 9:40 and 9:45. By the way, if you're not aware of this, there's a subscription service that you can get that will give you the PMI data ahead of the retail folks. And that's why you'll often see price spikes around 9:40, and then when it's released to the public at 9:45, you'll see another spike often in the other direction. It's because there's a subscription service available. So 9:40, 9:45 PMI, 9:55 Michigan sentiment, and then the beauty of them all, 10 o'clock home sales, which took us right down to rock solid support from yesterday, which we were all lining up ahead of time. So very good trading day. Like any trading day, you never optimize the sequences. You take what you can, you do your best, you move on. So from that perspective, it was very good teaching days, outstanding trading day, and then Friday afternoon was basically spent just staying out of trouble and sitting on the morning gains and the weekly gains. So a great day. You know, again, if you've been following me, I love the days like this. Very predictable, and I will make much more money the day after the trend day, as will most traders, than the trend day. Speaking of that, again, just sharing some insights from the ongoing room and from the teaching effort right now is, I got on, I certainly got on the ongoing room's case a little bit yesterday in terms of preparation for that break. Several of us were biased long, several of us traded it. Nobody certainly got the whole run, and anyone who did, bold-faced liar anyway. So we ended up getting the beginning of that and then the tail end of it on either the pullback on the long once we finally came in, or on the short side on the wholesale extensions, which were outstanding yesterday and this morning. But in terms of preparation and insight, I just thought folks were a little bit complacent heading into that. Obviously, the market was complacent, which is why you had the squeeze that you did. And although one should never really complain about making money, if you really understand this business, it's about maximizing return at any given point in time, and pushing for those outliers and pushing size, and that's something I'm going to continue to harp on in terms of aggression. We've done a couple of things in that room in terms of some real shorthand alerts. I think I might have said this a few days ago. Everybody gets one bullet for the day, and they're allowed to comment on that one bullet in which they think is a PJO, prime jelly opportunity, and so we're using that. I used it today certainly at the pullback toward 96 after the home sales data and a rock solid brick wall support, so we're continuing to try to emphasize aggression and focus, both ahead of time and certainly over the trade sequence. So we're working on some tools and tips like that. What else? In terms of the new trading team, it's pretty typical stuff the first week, trying to get the backward mindsets, if there are any, reversed. And I've often said I believe there's 4 stages in reversing a backward mindset. The first stage, of course, is you're doing something wrong. Second stage is to realize what you're doing wrong, being on the retail side of the trade and getting that flipped around so you're on the right side, the wholesale side. Third step is, the second step is just not doing what was wrong, just stopping. Third step is actually getting on that wholesale side, and then the fourth step is staying on that wholesale side and then pressing the effort like we just talked about. And so typically the first week is you've got people in 1 and 2 stages, the first and second. And so, there's a lot of energy spent, getting people into that second and third stage. So we're kind of at that point after the first week, and then over the coming weeks, you finally get people pushed toward that third and fourth stage, and hopefully for good. But it takes some doing. It takes some reversing. Reminding people that the news is irrelevant. I was adamant that I didn't want anybody looking at any of the news today, any of the data. I don't want to know what the expectation is. I don't want to know what the actual number is. Anyone who shares that is just trying to sell a news service. It's totally irrelevant. The only thing that's relevant is price action and response to news. So I could care less why the market came down to 96. I still to this very moment have no idea how the whole home sales data came out. I assume it came out worse than expected. Right? But I don't know, and I don't care, because that'll just blow your trading away. I care about price coming back to support. Short stuck from yesterday, pissed off longs who couldn't get in from yesterday. Those are the 2 groups that move the market. That's how you look at trading. Like a poker game, you're never thinking about your own hand. You are thinking about the other hand the other guy is holding, right? The other person. And we spent a lot of time talking about that this week. And remembering that all you should be thinking about is when you get into a position, what's happening to the person on the other side of your trade. That's what's important. And because that person's going to have to act and cover and buy. In this case, they're stuck. You're right. They're going to feel the fire. So that's I still see too many people thinking about their own trades and patterns and that kind of thing. You're thinking about what you're doing to the other person. Zero-sum game. You're right. They're wrong. It's going to fuel the fire. That's just the way the futures game works. I have had several requests, by the way, recently, again, for chat room, ongoing chat room, or participation in the jelly room. I know I could open a chat room and fill it and make money from it. I'm not interested in doing it. I want to continue to teach self-sufficiency, and just a reminder that the jelly room is for those folks that have been through the effort and they just wanted an open communication link. So we're doing that. We're providing ways for people to connect with each other, good shorthand dialogue over the course of the week. So again, I'm not going to pursue a pay chat room. I'm going to keep this other effort going. I'm also doing a little bit of one-on-one via audio with a trader, and I'm going to share with you how that goes. We're experimenting a little bit in terms of pushing each other and pushing each other real hard in terms of making sure we're maximizing our trading. So that's kind of going on. I've also had some requests for smaller tools other than the videos, such as recordings of a trading day. I'm thinking about that. I may set up something like Camtasia and record a trading day or 2 and make that available on the educational site. I don't know yet, but I'm certainly giving it some thought. So those are some perspectives on what was a very good week at this end. March is typically, as I told the group today, my best month, one of my best months of each year. I'm looking forward to it. Get rid of anything that didn't go right this month at your end. Start Monday with a fresh perspective, and hopefully have a bang-up week. So outstanding market rhythm this week. Outstanding trend days, trend afternoon days, consolidations, day after trend, you name it. So it's an exciting time to be around. A little tired. I'll leave it at that. Have a great weekend. I'll try to do a weekend post as well. Take care.